Hello, Tesla stock. Tesla is up about 5% today. You are getting a weird upgrade from Seeking Alpha. There is 3 potential reasons why Tesla stock is moving higher today, and they are all, as you could guess, very bullish. We are now likely to get a breakout into the $300 range as long as the markets don't utterly collapse. And unfortunately, some areas of this market look really bad, like some of the big banks. We'll get into that here in this video. The collapse, crisis, black swan event that really has been unfolding over the past couple of days might not be fully over, but there's positive things to say about Tesla. So we're going to make sense of this very unsensible market, if you will. If that sounds like something you are interested in, hit the like button and subscribe to the channel, especially if you are Tesla stock investors. By the judgment of how many likes are on this video, we can tell how many other fellow Tesla stock investors have watched this video and are up to date with everything going on with Tesla stock. So let's start with the 3 reasons Tesla stock could be up about 5% today. Number 1, I think this one's exciting. Someone somewhere knows something. Yes, it's a possibility Tesla stock is up 5% today because someone knows the Cybertruck announcement is coming soon. Usually big guys on Wall Street are tipped off on these big events before they actually happen. We've heard rumors of October 6th being the big date. That is going to be on Friday. That would make some sense to why Tesla stock would be up 5% here on the day today, and that would be pretty exciting. I do expect the Cybertruck delivery event, or even the announcement of the delivery event, since we've been waiting on this since 2019, and there's 2 million pre-orders for the Cybertruck, which will likely have a huge halo effect on Tesla's franchise and brand in 2024. Well, I believe it'll be a strong positive catalyst for Tesla stock and could easily send the stock into the $300 range. The second reason why Tesla could be up 5% today is positioning for 2024. I've said this many times now, but even if the economy does not go into recession, it's probably not going to be a really strong year for growth. So during a kind of stagnated growth environment, growth investors like to buy growth stocks. Believe that or not. I know it sounds contrary to what you might think. Now, investors don't want to buy low quality growth stocks. They want to buy high quality growth stocks, in which Tesla fits that bill perfectly. Tesla's self-financed. They don't need to dilute shareholders. They go to the bond market, they sell leases for billions of dollars. That's what you want to see. Tesla's making all of the right moves in that regard to be self-sufficient, self-financed. And Tesla is growing their operations quite a bit. Tesla is growing their EPS by 35 to 50% or more on any given year. So Tesla is definitely outgrowing any of your other large tech stocks out there with the similar degree of safety that you will find at a Microsoft, at an Apple, at a Google, at an Amazon. Odds are Tesla's business does not collapse out of nowhere. It's not a small or mid-cap stock that needs to raise capital. It's not a company that is on the brink of going bankrupt. Tesla, much different beast here. And if you factor in what I like to value companies with, the PEG ratio, factoring in price, earnings, and growth, Tesla is by far the cheapest big tech stock out there. It's 3 to 5 times cheaper than an Apple, a Microsoft, a Google, an Amazon, even a Nvidia. So I think a lot of positioning is taking place in Tesla stock. This could be in kind of a coupling with someone potentially knows something about the Cybertruck. I think both of these factors might be working together to give you this almost 5% rally in Tesla stock. The third reason why Tesla stock could be up 5% today, this sounds crazy, but I've noticed it over the years, is when Elon speaks, it's like there's an algorithm programmed to Elon Musk. What I mean by this is Elon tweeted about 9 hours ago at 4 o'clock in the morning, technically today, but really like last night. He retweeted Tesla North America, a post from October 3rd, The Model Y rear-wheel drive is now available in the U.S. starting at $32,890 after $7,500 federal tax credit and estimated gas savings. Elon responded and said, more affordable version. The rear-wheel drive version of the Model Y is now available. No, it performs well on snow and ice with all-season or winter tires. All-wheel drive is nice to have, but not required for winter driving. This is one of those things where if you look at Tesla's chart, you were down 2% yesterday. You were up 0.5% the day after, the day before that. You did not see any reaction with Tesla stock on this lower price version of the Model Y, which the Model Y is the best selling vehicle in the world. It will likely finish that way by the end of 2023. So it's like this got no credit in Tesla's share price, but I believe this could be having a factor or an effect on Tesla stock today based on Elon talking about it. I know that sounds crazy and there's no way to know exactly, but it seems like there's some kind of algorithm programmed to Elon Musk's Twitter account where if he says something important that is really important, like a new rear-wheel drive version of the Model Y, well, the stock tends to react when Elon talks about it, not when the news actually breaks. So those are the three reasons why I think Tesla's stock is up about 5% today. If you're looking at other names on the markets, whether they are small mid-cap stocks, whether they are any other name really or sector, big tech stocks, Tesla is massively outperforming. So I really think it's a combination of all of these three things. Now, where we are with Tesla stock on the charts is very exciting. We'll get into that after we get into all of the news on the day today, because I really think everyone could benefit from seeing the charts and exactly what could be coming next for Tesla stock. Check this out. The Cybertruck is spotted towing a SpaceX rocket engine at Starbase. That is impressive. The Model Y is now New Zealand's best-selling car. This comes to us from Tesla Australia New Zealand's X account. And the Tesla Model Y outsells all other passenger cars again in a bumper month for EV sales. This is in Australia, and we have now passed another milestone in the first 9 months of the year with more than 65,000 new pure battery electric vehicles sold in the country year to date. Tesla once again led the charge with the Model Y outselling every other battery electric model in the market and all other passenger cars on the market, be they diesel or petrol. Ford has given the UAW a new offer. Ford is offering to increase temporary workers' pay by 26% to $21 an hour and raise most full-time workers' pay by more than the 20% over 4 years it previously offered. We don't have too many other details on this, but I'm sure it's not a great deal that's really going to handicap Ford, really all of the legacy automakers, and as a lot of people are starting to say, really put them into their own niches. Maybe they have a select model or two that does well, but they don't become kind of what they are now as kind of the monopoly of the legacy auto currently with ICE vehicles. They don't really become that with electric vehicles. Kind of a smaller, leaner version of themselves today due to the fact they just can't compete. They can't out-invest Tesla, and that's their problem here. So these strikes, they're probably going to last quite a while if I were to imagine. This is having a negative effect on the economy today, and I think we will continue to see this negative effect on the economy in the months to come. Rivian's CEO said something that could also be interpreted as good news for Tesla. Quote, "Demand for our products is very strong. What we're going to see as we go forward is a very clear staircase or set of steps that get us to profitability as a business." The first sentence here, demand for our products is very strong, is something that is very welcomed to see as a Tesla stock investor. Good demand for Rivian likely means good demand for Tesla, especially once Tesla starts actually producing the Cybertruck. Well, it's a pretty good sign there's a lot of demand for quality EV trucks. Nikola to start delivery of hydrogen trucks within a few weeks. The facility is expected to be capable of achieving an annual production capacity of about 2,400 trucks across 3 shifts when fully ramped. Check this one out. 2 Cybertrucks that have graffiti on the side. That's pretty cool. I just imagine how those babies would sell, what price they would sell for. But nonetheless, 2 Cybertrucks with graffiti on the side with Starlink satellites on the top were spotted in Mexico. What in the world is even going on anymore? We have to be close to the delivery event being announced. Ford sold 20,962 EVs in Q2, up 14.8% year over year. The Mach-E sold 14,842. The F-150 Lightning sold just over 3,500, and the E-Transit sold 2,617. Ford and GM combined sold 41,019 EVs in the US in Q3. Despite GM claiming in the past they are the leader in EVs, they came in 3rd place in terms of EV sales in Q3. Here is also some really good news for Tesla stock investors. An ex-Tesla factory worker loses a bid for a new trial in race bias case. Now, this is something we have been kind of following a little bit over the past couple of weeks now, but essentially somebody said they were discriminated against and they wanted to open this up to a larger kind of trial, or at least that's where this could have went, but it seems like the judge continues to bat this down and does not let this go any further. So there is a settlement getting paid out, but it's not going to be a wide thing that affects, you know, multiple different employees or something that would materially affect Tesla's business. And take a look at this photo from Lucid Motors. 7 Lucid Sapphires cost a combined $1.75 million. Lucid spent over $3.5 million just to build them. Now, in a little bit of weird news, I'll say, Seeking Alpha is upgrading Tesla to a hold because they expect Tesla will fare better than the auto industry. In the summary here, it says, we are upgrading Tesla to a hold in spite of our cautious view of the auto industry in the second half of 2023. Q3 2023 deliveries declined 7% quarter over quarter to 435,000 and fell well below Wall Street's estimates of 461,000, primarily due to factory shutdowns for upgrades. We think the automotive market will experience headwinds from the high interest rate environment, but expect Tesla to fare better than the market in Q4 2023 and the first half of 2024 with recent upgrades. We fully expect Tesla to remain aggressive with its pricing strategy, but expect the company to hold its margins through 2024 due to the planned cost reductions. We now see a more balanced risk to reward profile for Tesla. They did not provide a price target, but an upgrade is an upgrade nonetheless. Could be having a slight effect on Tesla stock today, but I would imagine it's the reasons we went over in the beginning of this video that are having the real material effect on Tesla stock today. Also, to support the theory of maybe someone somewhere knows something in regards to the Cybertruck and an upcoming delivery announcement, you can sometimes, most of the time, see increased option activity before you get a major announcement or a major catalyst or event. And that's exactly what you're seeing today. Today, you have seen 803 orders totaling $1.65 billion with a positive order value of 67%. It's not all too often you see $1.65 billion worth of Tesla options purchased on any given day. And especially couple that with the stock being up 5% with a positive order value of 67%, as we still have the last half an hour or so in which we typically get most of the option activity coming in. Today could end up being a $2.5 to $3 billion option inflow day for Tesla. This is not happening for no reason. Now, we also did get some, I guess you would call, bad economic data today, which is having a positive effect on our markets. First things first, the ADP employment change, which is kind of a forward-looking employment report that usually comes out before the government payroll report, which is on this Friday. Well, it can give you a glimpse in maybe if that report from the government is going to be strong or not, the non-farm payroll report. And the ADP employment change was expected at 153,000 net job ads. It came in today at 89,000, so far below expectations. So that is showing maybe a weakening in the labor market as far as the ADP employment change. So that is bad news that is having a good effect on our markets. The markets want to see a deteriorating economy, deteriorating labor market to some degree. You don't want to see a recession here, but you don't want to see continued strength as well. You also had the ISM Services PMI, which came in right in line with expectations at 53.6. Factory orders came in better than expectations at 1.2%. You were expecting 0.2%. ISM Services employment came in at 53.4. The estimate was 54.5, so that was worse than expectations. Again, positive for the markets. Factory orders excluding transportation came in better than expectations at 1.4%. ISM service business activity came in at 58.8%. That was better than expectations of 57. ISM services new orders, this one is important. This came in at 51.8. You were expecting 57. So this was far worse than expectations. And ISM service prices came in at 58.9. You were expecting 58.5. So a little bit better than expectations. Not the greatest sign, but it's not, 60 plus. It's not too high to be bad news. So what we've seen today, kind of bad economic data or weakening economic data that is having a bullish effect on the markets today. You are also seeing the price of oil is down about 5.5% today. This is also having a very positive effect on the markets. And we didn't get any new news, I'll say, or any change here, but it looks like Saudi Arabia confirms that they're going to hold the price cuts that they have continued to have on their output of oil, 1 million barrels a day. They're going to continue to hold that. They're not going to introduce more price cuts. So I think it was one of those things heading into this announcement from Saudi Arabia where some people were trying to front run potentially maybe more production cuts from Saudi Arabia, and that did not happen. So it's one of those things where nothing really changed on a fundamental basis, but people were getting over their skis on more potential cuts to oil production. Now, this bad economic data today is causing the 2-year Treasury to drop almost 10 basis points today. That is very good. It's causing the 10-year Treasury to drop about 6 basis points today. So in a weird way, you're continuing to see a steepening of the yield curve inversion. So it's continuing to uninvert today, which is strange because usually this happens right before a recession, but usually before a recession, your 2-year, your short end of the curve will start to expect rate cuts, and that's usually what causes the uninversion, not the 10-year, which starts to rise higher than the 2-year. So we're kind of in unprecedented times here. But I think the same logic applies. When the yield curve uninverts, it's usually right before a recession. If the data continues to get worse and starts to look really bad for the economy, you will get emergency rate cuts. You will likely see a recession, and that will just not be great for our market. So it's a fine line between bad economic data turning into a recession, or bad economic data turning into the Fed being easier on Fed policy and no recession. Hopefully that makes some sense. If you're looking at the yield curve inversion, which is uninverting, and now you're only inverted 34 basis points, you have inverted about 60% since the lows back here in June. Well, this would be telling you you're heading into a recession. So this is, I guess, not great, but we're still not uninverted yet. Typically, when you start to uninvert, it happens pretty quick, and that's kind of what we've been seeing recently. The uninversion is happening pretty quick, but you still need to see some event to cause a rapid steepening of the yield curve inversion. Something that I will say is very negative that you're seeing is some of your large banks, like a Bank of America. Bank of America was down big yesterday. Bank of America was down about 3%. The day before that was down about 2.5%. The day before that was down 0.5%. Now today is down another 1%. Same thing with Citi. Citi is, also been getting beat up recently, falling, 1.5% basically day after day after day. Today, down another almost 1%. If you look at these on the weekly charts, you're basically at your banking crisis lows. So something is going on with big money in the banking system. Wells Fargo is barely positive today, but still at your banking crisis lows. Same thing with JP Morgan. JP Morgan's faring a little bit better, but still, the banks are not doing well today. The banks have not been doing well over the past couple of days, and I think if we are going to have stress in the system due to yields going higher, you're probably going to see that in the banks, and the banking crisis may not be over at that point. Now, TLT is rising today about 1.11% due to the economic data that we got today coming in weaker than expectations. So that is good, taking some pressure off the banks and their unrealized losses that have been mounting, but it's not enough to make the stocks be green today. That's not great. Now, the dollar, something we've been watching very closely, is down today 0.19%. That is good, but I'm not going to sit here and say the upward trend is done here. If the dollar continues higher, if economic data continues to be strong and yields rise and the dollar rises, well, you could be in for more pain here in the market. So I think today is a positive, especially seeing oil down over 5%, but it's not an end-all, be-all. The crisis is over, the crash is over. Far from that. You need to see the Fed really change course here before at least the banks and some of these financial institutions are in the clear, or at least closer to being in the clear as far as any potential bankruptcy or crisis risk. This article says Tesla stock flashes aggressive buy signal, leading S&P 500 as bulls shrug off bad news. They say the bad news is the delivery number, but that Tesla cleared its 50-day moving average line Wednesday and has been added to IBD leaderboard and swing trader with a buy zone of 254.77 to 258.40 for aggressive investors. And it goes on to say that the stock could rise to about that 278 level with a current cup and handle base. And analysts continue to remain positive, and the strike with the UAW is going to have a positive effect on Tesla. Now, like I said, I think the reason Tesla is moving higher today is one of the three reasons we went over at the beginning of this video, probably a mixture of all three of them, but I think this article highlights what I've been saying. The 50-day moving average is critically important. It's been a level in which we found quite the resistance at recently. Last time we broke above the 50-day moving average, Tesla stock broke above the 50-day around where we currently are, about 256, and then continued to rise to about 280. That was a percentage gain of about 9% after breaking the 50-day moving average. Now, as long as the markets do not collapse and fall apart, Tesla stock could easily start to make its way into the 300s, especially once the Cybertruck delivery event happens and we get a final date for deliveries. Hopefully we get more clarity on how many deliveries we're expecting for 2023 and 2024, but breaking the 50-day moving average, especially with such a strong day, Tesla stock currently up 5.23%, not a shabby day at all. The 50-day moving average at $250.49, Tesla stock approaching 260. This was not a small break. This is almost a $10 break of the 50-day moving average, while your next resistance level is around 265, and then above that, this line is what's going to be important to break out above. Currently, it's at about 265, 266, around there. If you break above that line, that's where you have a cleaner shot to the 300s, maybe the mid 300s. That would not surprise me considering how underweight investors are heading into 2024 in Tesla stock and how appealing the higher growth rate with the stability and the self-financing that Tesla has. Just fundamentally speaking, Tesla looks appealing for 2024. You also kind of mix in there low expectations for growth and deliveries in the range of 27 to 29%, deliveries being 27%, EPS growth rate being 29%. Tesla has smashed through those numbers historically. Last year was much better than that. The year before was like 80% growth on EPS, at least 50% delivery growth. Those are really low estimates for Tesla, so there's probably room for estimates to go higher, and I think that's also another reason why Tesla stock is moving higher. Now, if we get any weakness in the markets, any potential crash or crisis, then obviously none of this is going to matter. Tesla stock is going to follow, generally speaking, what the markets do. It doesn't have to, but it typically does, so keep that in mind. On any downside, your 100-day moving average of 245 looks to be the level Tesla stock would probably find a lot of support at. Now, if you look at the MACD is slightly negative on the day today. Your yellow line is starting to curl up. If it breaks above the blue line again, that could be a signal of even further upside to come. And your RSI, even after today's almost 5.5% gain, is at 54.44. So you have a lot of room to make an upside move before you're overbought, meaning that it would be pretty easy for Tesla to regain the 300s before the RSI became a kind of indicator of a top. So you're far off of any downside indicator here with Tesla stock, long story short, guys. So that is going to go ahead and do it for this video. That is everything you need to know on Tesla stock here today. Hit the like button and subscribe to the channel if you are a Tesla stock investor, if you want to make more money, if you want to grow your net worth, or at the very least, stay up to date with everything going on with Tesla stock each and every single day. My name is Michael Tyler. If you guys would like to come join us in the trading community, link down below in the description of this video. I send out alerts every time I make trades, whether we are hedging our portfolios, whether we're going long on Tesla or any other stock. We're buying stocks over there for the long term, whether we are shorting, we are doing some YOLO, some earnings trades, all of that. We do it all. Link down below in the description of this video. Or if you just want to come become a better trader, come learn from people that have been doing this for a long time, link down below in the description of this video. Again, my name is Michael Tyler. Enjoy the rest of your day, and I will see you at 9 p.m.